When prices rise, most people panic. Groceries cost more, rent climbs, savings shrink. And for the average household, it feels like money is vanishing faster than ever. But for the wealthy, inflation isn't a crisis, it's an opportunity. Because while millions of people cut spending and struggle to keep up, the rich are quietly making more money than ever. Not despite inflation, but because of it. This is how they do it, and why the same economic storm that drains one class can make another even richer. Inflation hurts cash, but the rich don't hold cash. For most people, money just sits in a savings account, losing value every time prices rise. Inflation means every dollar buys less tomorrow than it does today, a silent tax on cash. The wealthy understand this better than anyone. That's why they don't hold cash, they move it. Instead of letting inflation eat away their purchasing power, they buy assets that grow as money weakens. Real estate, stocks, commodities, and private companies that can pass higher costs directly to customers. When inflation goes up 8%, but your property appreciates 10%, you've beaten the system. That's the quiet game the rich play, turning rising prices into rising net worth. Warren Buffett put it perfectly. The best protection against inflation is owning a piece of a good business. He's right. Toothpaste, utilities, oil, fast food. People don't stop buying them when prices climb. They just pay more, and those profits flow straight to shareholders. The ownership advantage that inflation punishes spenders but rewards owners. That's the simple, brutal truth. When rents rise, tenants lose, but landlords profit. When food prices surge, shoppers complain, but investors in those grocery chains earn record dividends. Every price increase transfers wealth from the consumer side of the equation to the ownership side. The rich position themselves as producers, not customers. They own the apartment buildings, the farmland, the oil wells, the logistics firms, and the brands that can raise prices and still sell out. So while the middle class watches costs go up, the wealthy are watching revenues do the same. It's not luck, it's structure. The structure of ownership. The debt trick. Here's a move few people understand. The wealthy actually like inflation when they're in debt. How? Because inflation shrinks the real value of debt. If you owe $1 million on a property and inflation rises, that same debt becomes cheaper to repay in future dollars. Meanwhile, the property value and rent usually go up. That's why real estate moguls borrow aggressively when inflation starts to climb. They're using cheap debt to buy hard assets. And inflation does the heavy lifting. The investment shift. During high inflation, the rich rotate their portfolios into inflation-resistant assets. Energy and utility stocks, precious metals like gold, infrastructure and agriculture, dividend-paying companies that raise prices without losing customers. It's not panic, it's positioning. While the middle class worries about expenses, the rich are busy adjusting their income streams. Inflation exposes the financial gap between those who work for money and those who make money work for them. The rich don't fear it, they prepare for it. Because while inflation takes value from savers, it quietly transfers it to owners, investors, and creators. So when prices rise again, ask yourself one question. Are you consuming or owning? If you want to learn how to think like the wealthy and protect your money during inflation, subscribe to Financial Patterns, where we turn economic chaos into clear, profitable insight.